And as the year wraps up, investors are watching to see if the traditional Santa Claus rally shows up. And so far, it has not. So here with us in studio right now to look at what that year-end market pattern really tells us is Mark Ting. Mark, of course, is our guide to personal finance. He's also a partner at Foundation Wealth. Hello there.
Hi.
Tell us, what is this Santa Claus rally?
Usually starts around December 15th and it lasts to the first couple trading days of January. And historically, the markets have gone up about 1 to 1.5% over those 2 weeks. Now, 1.5% doesn't seem like a lot, but if you consider it to, like, say, a GIC that goes up 2% over the whole year, actually going up 1.5% over 2 weeks is actually pretty good. Now, the reason it happens, there's a couple variables that add to it. People think that generally there's something called tax loss harvesting, where people sell realized capital losses to offset capital gains. That sort of happens earlier in the month. And by that time, by now, which is the sort of Santa Claus rally time, that selling pressure is gone. And also people might have, bonuses, doing last year-end investments. So there's a little bit more demand. So that's sort of the main reasons why there tends to be a rally. It's not a guarantee. Happens about 7 out of 10 years.
I see. Okay, so should investors expect one this year?
So this year, first couple of days has been on the decline. Okay. But we had a good day today, so maybe this is the turnaround. So I'll tell you in 2 weeks.
Okay, well, maybe after the fact. But markets are firmly in the green today, as you point out. So is that likely due to a Santa Claus rally or just a normal year-end trading? A
bit of both, I would say. I mean, we have had a bit of a slide on the markets, particularly the NASDAQ over the last couple of days. So it's quite normal. After 3 bad days, you get a little bit of a bump up. The main reason markets went up today had nothing to do with Santa Claus. It had to do with inflation. And the inflation numbers came out in America, and they were much lower than expected. When inflation is down, that gives sort of the green light for interest rate cuts. Interest rate cuts means more liquidity. More liquidity means markets are happy. So because this inflation is steadily going down, now the market is sort of pricing in some future cuts. So that's why we're going green. But the market's very fickle. They can think this way today, they can think something else tomorrow.
Well, and it's interesting we're having this conversation this time of year as well, because it makes it difficult to stay on budget. There's the gifts, there's the holiday events and everything. So what would you say are a few practical ways that people can avoid overspending?
So I would say the best role model for this case is not me, it's actually my wife. My wife loves Christmas, loves Halloween, and she starts budgeting for these holidays a year in advance. So wow. She has money now to spend because she has budgeted since January 1st. And the reason why is because she doesn't want to blow her budget, and she doesn't also want to feel like she can't spend. So she's constantly buying new trinkets, new decorations, and whatnot. So if you're very organized, that's what you should do. You should have a budget, you should spend it, and if you have to save for it throughout the year, that's what you got to do. Now, if you're a normal person and you don't do that, then essentially you want to work backwards. You should look at your budget, what it is. You should know you don't want to overspend, and then you should work backwards. So if your budget was maybe $300 for gifts this year, then you got to figure out how many people you got to give gifts to, and then that's how you sort of break down your budget.
Well, your wife sounds very organized. I envy someone who has an approach like that and the discipline to follow through on it too. But, a lot of families have at least one person who is difficult to shop for. Some of them have a lot more. But what do you suggest for someone on a budget buying a gift for a loved one who already seems to have everything?
I mean, there's always the tried and true Secret Santas. Those always really work. But for the person that seems to have everything, if you talk to people in those situations, often they talk about experiences and time being what they really like. Right. So I would think, when I was thinking about it, I was thinking, okay, so if a son or grandson or granddaughter or whatever was talking to their parents or their grandparents who had basically could buy whatever they want, what would they want? And it would be an experience. So something that came to mind was a play. So there's a play out there right now called The Jury Experience. And this was sort of a suggestion from a client of mine. And he went to it and he said it was phenomenal. So it's an actual play, which is some people may or may not like. But the difference between this play and regular ones is the audience is the jury. So it's interactive. So there's a very hot topic right now. It's like they're just sort of debating the prosecutor and the defenders about AI. And then ultimately, the jury decides who wins. So that's one thing. So let's say that play lasted for like an hour and a half. That's kind of a cool thing for like a son to invite a parent or a grandparent to. But then there's also the time after. What happens is you go for drinks, you go for dinner, and you discuss sort of this conscientious topic, right? Controversial topic. And then it sort of goes on from there. So as someone who receives that, you're spending time with a loved one that you usually don't spend that much time with. And I'm guessing it'll just be something that someone who can buy whatever they want would find very rewarding and making memories. They love it.
Yeah, well, I think that's the point right there. The making memories part of it is. But what if someone wants to give a gift related to finances? Some thoughtful options that on that front that don't feel impersonal, I guess.
Yeah, we've talked about this before. There's several books that I always highly recommend. Last year, my top book was called The Happiness Advantage, so I'd still put that on the top of the list. You read it and you sort of think of things differently. Like, don't let little things ruin your day, and you be happy, and it's sort of like it has this multiplying effect. And then the one that we talked about a couple of weeks ago is another book, Anything by Morgan Housel, who is the author. His latest one would be The Art of Spending Money. And of course, you could do what I did when my kids were younger. Like I bought them investments. If they liked a company, I say, okay, let's say they like Nike. Well, let's not buy the shoes. Let's buy the stock and see how it goes. So there's an interest there. Some of those investments worked out really well. Some of them crashed and burned, but that's how you learn.
Okay. Well, now that your kids are young adults, you're probably not buying them Nike stocks. I don't know. But I mean, how do you approach gift giving now?
Yeah, it's more of a need. Like when I look at what my kids are at, so they're 20, almost 21, and like 19-ish. So what do they need? Honestly, I have no problems right now giving them money or pseudo money type of a thing, because one's in BCIT, going to school, commuting, and even though he's horrible with money and he spends way too much money on Uber Eats, and I cringe every time I see all these empty bags. But ultimately, I want him to do things, have experiences, go skiing, doing things like that. So I want him to have some money there. My daughter's kind of the difference. She's working full time, so she must have a ton of money. And for her, she's doing big things. It's like she's going, because she's earning money, it's her own money, she's going to Toronto to visit her friends who are at university. I'm hoping that inspires her because she's not there yet. And she also is in love with music, so she has lots of instruments. And then just a couple months ago, she's like, I'm going to go to a concert. I was like, which concert? And she was like, it was Damon, forget his last name. He's from Gorillaz and Blur from back in the day.
Okay.
So guess what? She's going to that concert. Is it in Canada? No, it's in Liverpool. So she saved her money and is going to go to Liverpool by herself as like a 19-year-old to go to this concert. And I'm probably going to help, not with the tickets or anything like that, but maybe help her with some spending money over there.
And Jake whispers in my ear, it's Damon Albarn.
Albarn, yeah.
Albarn. just to close that loop and everything. Yeah, it's kind of fun. But you didn't give away any
investments?
No. I'm just saying you didn't give anything away in this conversation. They're not listening right now to know what's coming their way.
She paid for all this stuff herself. Well, for the kids?
Yes.
Yeah, no, they're not listening.
Okay. Well, maybe they should be listening too. They could take some of your advice. Yeah. Listen, Mark, I hope you enjoy the holidays. Thank you very, very much for all you bring to On the Coast all year long.
Oh, thank you. That's very nice of you to say.
That's Mark Ting. He is our guide to personal finance. He's a partner at Foundation Wealth, and he joins us every week at this time, and we'll be sure to connect in the new year.